Good morning, everyone. I, on behalf of Borivali Kanduli Study Circle, welcome you all for today's session. Further, I welcome our today's speaker. I welcome CA Keshav Gupta ji and thank you for accepting our invitation for delivering our lecture at our study circle. Welcome, sir, to our study circle. Topic for today's session is departmental audit under GST under section 65 and how to handle it by CA Keshav Gupta ji. Our members will get immense benefit on this topic from the knowledge and experience of our learner speaker. He is a very young and dynamic speaker. Before handing over the today's session to our speaker, I would like now request CA Bharat Joshi ji to introduce CA Keshav Gupta ji. Over to you, Bharat ji.
Very good morning to everyone. Am I audible to all?
Yes, sir. Audible.
Yes.
CA Keshav ji is from Jaipur based firm, and he has a wide experience in terms of goods and service tax. Even earlier, prior to goods and service tax, he was in customs law, service tax, foreign trade policy, and also local VAT, and they provide also business consultancy. Apart from this, he has a regular practice of sharing his knowledge through Dainik Bhaskar. He is considered as a GST expert, and that is a Hindi newspaper. He also writes various articles and topics on GST matters. His articles are published in Taxman, Gem World, and other things. He also delivers a varied range of lectures on GST in various business forums like HDFC Bank, ICAI, CAG, and other places. Um, he enjoys actually talking on GST, and also he is quite active on social media also. So with these few words, and before I tell or hand over to him, I have one request for him, and that is just tell also whether this GST audit by department can be routed through chartered accountant, or it will be exclusively for departmental officers.
Right.
So over to you, Keshavji.
Thank you so much, Bharatji, for such a nice introduction. And before I start, I would like to thanks in advance to the Borivali Kandivali East CP Study Circle of ICAI WIRC branch, and also the conveners of the study circle, Dilip ji, Akhilesh ji, Aditya Vikram ji, and Shalendra, my good friend. So with this, I'm very happy to see that we all have gathered on Sunday, because in Jaipur, what happens, Sunday usually is taken as an off day, and people are less interested to held any kind of session on Sunday. So very warm welcome to all the members present here, and in next 1.5 hours, I'll be taking you to the what are the provisions for GST audit under section 65, the GST Act, and how to handle such audits. So those whatever is the agenda, whatever the coverage, I'll brief you. And this GST audit under section 65, which is regarded as a departmental audit, it has gained more importance after the abolishment of the voluntary audit. So voluntary audit, or you can say section 35, which prescribed the audit for registered taxpayers by a CA or ICW or few of the professionals. So there was a provision under section 35, subsection 5, that if the turnover crosses to beyond a prescribed limit, the books of accounts under GST law are required to be audited, and the scope was little limited. So the only problem was that there was a limited scope. The auditor's scope was confined to more of a reconciliation statement preparation and less of an audit. But yeah, when we see the section 65 of GST Act, the powers, the coverage, and the entire government of the services of audit is very has a wider coverage as compared to when we see section 35 subsection 5. So most probably maybe there was a understanding between the business and the department that or the government that such types of audit may not be required, and merely preparation of a reconciliation statement will not serve the purpose. So definitely, likewise, it happened in earlier laws also, when there was a Rajasthan VAT, So they introduced VAT audit for first couple of years and then they withdrew it. So same thing happened with GST, and I was pretty sure that this is going to happen because indirect taxes, जो audits hain, under the indirect taxes law, they are less of, they are less given to the professionals, and they are more relied by the department on their own internal audit team. So this way situations develop, and now we are in a position that there is no kind of audit by the registered person himself, or he is not supposed to get his accounts audited by a chartered accountant under Section 35. The section has been notified, the omission of this section has been notified, and now the entire audit responsibility has been given to the GST audit department team. So department audit team, now how are they going to take up the audit? What is going to be the challenge, or what kind of paras they're going to create? Definitely they have been issued guidelines for conducting the audits, how they have to conduct the audits, how they need to take up the issues. But yes, when there's a practical reality, we see things differently, and maybe the procedure says something, but yeah, there are a few flexibilities provided in the procedure, and as I mentioned, the powers given to the officers are very wide. So this has become an important topic as of now, and I'm sure as far as I witness right now in Jaipur, Rajasthan, the position is that day by day the number of audits are increasing. So there was a time, it started back in January 2019, so there was a time when they started only with the first financial year 2017-18, and at that time there were only a few of the audits were assigned to the audit commissionerate. But yes, now the position is something different, and the entire planning for the entire year is delivered to the audit commissionerate by the DG audits, and then the audits have been started. So yes, now the volume has increased. In fact, if I talk about the employment in this particular area in Jaipur itself, most of the CA firms are hiring professionals for the purpose of handling GST audits under Section 65 instead of those which were required earlier. So previously they were hiring for Section 35, now they're hiring more for Section 65 audits, so that any professional can handle department audits. And I'm sure Mumbai is the commercial capital of the country, so there the volume of audits, the volume of notices, the quantum of issues, and the amount involved must be considerably higher as compared to, I'm sure it must have started, so it must be considerably higher as compared to Jaipur. And if I talk about the state GST department here in Jaipur, they started pretty late because they were all already involved in few of the issues, right from their amnesty scheme were there for disposing of the matters of the earlier law, and a few other issues because the procedure is little late there, assessments are a little delayed there, and there were many extensions with regard to submission of declaration forms and all those things. So I'm sure the same position must have been existed in the Maharashtra VAT law also, and to some extent they were a little late to start the audit procedures. So they have also started now, and they have also started issuing the notices right in this current financial year itself. They have started the auditing processes. So yes, the position is now that we are in a position that self-assessment, responsibility of self-assessment lies on the SSC. Entire process for self-assessment, entire responsibility has been shifted to the SSC now in the self-governance scheme, right from your compliance to your e-waybill compliance or your e-invoice compliance or your self-stuffing or container stuffing. Entire processes which were earlier dedicated to the government officials in some or one or other way. If I talk about the last 30 years of development of this indirect taxes, so you'll find that most of the functions were earlier assigned to the department officers, and gradually the positions, the relaxations were given, and the onus of filing the returns, onus of compliance, other compliances, onus of container stuffing in the GST regime, everything was shifted to the SSC himself or herself. So the onus now lies on the SSC more, and department is just there to check your records. They're there to assess. So the assessment procedures, the audit procedures, they have been made more strict. And I'm sure you must be aware that when it is a self-governance scheme, the responsibility of SSC increases to some extent, which is very on a higher side as compared to the as against that self-governance scheme. So with this background, I would like to start this session for today and welcome you all once again. And I think a few of the participants are asking that when can we ask the query? So we can take the query session at the end, or even I think it will be better at the end, because you
yeah,
know,
we'll take
put on
the
your queries.
Q&A session in the end. Members can post their question in the
Yes.
chat box. So
Yeah.
we'll collate it and we will then have a Q&A session.
Yeah, so that would be a better option, because you know, interrupting in between would create little delay for others also. So let us start with this session. And the coverage, before I give you the entire deliberation, the coverage is like, I have introduced, I have given the legal provisions. What are the legal provisions for audit? Now, apart from those legal provisions, there are a few principles which have been provided to the auditors, like department auditors, how they have to conduct the audit, what kind of offices are there for audit. They have been given some guidelines. They have been given some duration criteria that in this time frame they have to complete the audits. Then most important part is the selection criteria, because you know, number of assessees registered in the GSTs are pretty high. They are, you know, number is very high, and they have to filter it down, and then they have to select the assessees. And I'm sure this must be a bigger process in Mumbai as compared to this Jaipur, because you know, here number of assessees having big size or very large turnovers, they are pretty limited. Like they must be somewhere around 100, 150 or somewhere like that. If I talk about the 100 crore plus companies, I'm sure they must be not more than 150 or 200. But yes, when it is a commercial capital of the country, there the selection criteria plays an important role, because most of the assessees are already crossing those benchmarks. So what are those risk factors? What are those parameters on the basis of which the auditee is selected for the purpose of audit? And what is the process flow? We are going to discuss that also. Now, important documents and details, whatever the assessee is supposed to maintain, because you know, ultimately the audit is going to be of the compliance level, and then your records also, their documents also. So what is the importance of every document? What is the importance of your records? How department team is first reviewing their things at their end, and then they're floating it to the auditee. So all those things we are going to discuss. And there are few important judgments which with regard to the constitutional challenges. So we will discuss those judgments also, and how you can, you know, handle the auditor, how you can prepare your SC for the purpose of audit, plus few common issues which are, you know, we are facing in every audit, because you know, whatever are the audit findings, the audit team across the zone or across the India, they are circulated to the rest of the zones also, or rest of the audit commissionerates. So yes, there are few common issues which have cropped up, and the maybe even if we give any data for it or not, those issues are taken as audit paras. So yes, there are few common issues. So we are going to discuss those issues also. So let us start. What is audit? So the meaning of audit, that is the very base definition, audit, which has been defined under section 2 subsection 13 of CGST Act. So audit means, if we talk about the definition, it says it is a detailed examination of records, returns, and other documents. So whatever records you're maintaining, whatever returns you're filing, and any other documents which can be included in the which are included in the GST regime. So they can examine those records, or maybe not even just under GST law, because it clearly says under GST law or any other law or rules. So even if you're maintaining some records under income tax law, those are also considered as documents for the purpose of examination by GST officer, or for the purpose of examination under audit. So if you're maintaining these documents under GST law or any other law, because you know, few of the entities are required to maintain documents as per other laws also, because company law says that these documents are required to be maintained by a company. Income tax law says few of the documents they specify a little less. And if we talk about then SEZ entity, SEZ rule says that there are certain documents, additional documents, which are required to be maintained by an SEZ entity. So all those documents, all those returns, all those records, they are kind of, you know, available for examination. So under GST law or under any other law, they are if they are supposed to be maintained by the registered person, then they can be examined under the definition of audit. Now, what is the purpose of audit? So purpose of audit is defined as clause B, means for the verification of correctness of. So they need to check the correctness of the turnover you have declared, the taxes you have paid, the refunds you have claimed, the input tax credit you have availed, and assessment of compliance with the provisions of GST law and rules. So I'm sure turnover declared, taxes paid, refund claim, input tax credit availed. These 4 parameters were already evaluated in the form of reconciliation statement while preparing the reconciliation statement, although the scope as specified by the department press releases or FAQs was a little less, but we as a chartered accountants were doing something extra, and we were trying to identify those areas also and trying to save the cost for the SSC. So we were verifying the turnover declared, taxes which if they have paid, any refunds, the position of refunds, and ITC. Definitely we were taking care of that. But yes, assessment of compliance with the provisions of GST law and rules, this is a very bigger, this is giving a wider coverage to the definition of audit. So it is not just confined to the verification of turnover, taxes, refunds, input tax rate, but it is including everything, all the compliances which you are supposed to do under GST law and rules. Everything is covered for the purpose of verification of the correctness of those laws and provisions. So this is the definition of audit under section 213. And with this definition, I can say that the scope of audit is pretty high, and it is not confined just to one or two verifications. It is confined to, it is liberal enough to cover the verification of all the provisions of GST law. So section 35 subsection 5 was the audit by the chartered accountant, which has been omitted. So today's topic is section 65, which talks about the audit by tax authorities. So I have already given the summary of the entire section 65. So section 65 says that the commissioner, so here there are the powers, they can order the audit of the SSC. So the powers are derived from section 65. So section 65, the person who is in the rank of commissioner and any other officer who is authorized by him, definitely by an order, he may undertake audit of any registered person for such period, at such frequency, and in such manner as may prescribe. So period, definitely they can choose the period. Frequency also, there is no problem, it is prescribed. And the manner of taking audit, it has been prescribed in the rules. There's a procedure which has been given, how you have to start the audit and how you have to end the audit. So that is referred as GST audit manual for the internal department persons. And for us, it is rule 101. So the commissioner or any other officer who is authorized by him, he can undertake the audit of the registered person. Frequency, period, and the manner has been prescribed. And audit can be undertaken by the registered at the business place also. So place of business is an important word. Audit at the place of business of the registered person or in their office. In their office means at the end of department office. Department office can also be given to you. The officers can ask you to come to their office and give the records there. Your books will be audited there. Or alternatively, they can visit your place of business and conclude the audit, and they can commence the audit. So subsection 3 says that audit has to be, the notice which is to be given for the purpose of audit, it has to be given for by way of notice of not less than 15 working days. So minimum 15 working days gap is required before giving notice to any auditee for the purpose of audit. And there's a timeline also for the completion of this audits, which says that there are 3 months. Subsection 4 says there are 3 months from the date of commencement of audit. So the date of commencement is an important word, because the date of commencement, as per the explanation added to the section, says that date of commencement begins when entire set of documents have been given to the audit team, or they have visited your premises. In case there's the audit is supposed to be concluded at your place of business, so assessee's place of business. So whichever is later. So the period of 3 months would start from that particular date, and then the audit team is supposed to complete that audit in within 3 months. So if you see, all the conditions are mandatory, notice is mandatory, 15 working days notice is a mandatory condition. Audit has to be completed within 3 months, because everything is preceded by word shall. But yeah, this 3 months period is extendable to 6 months by commissioner in special cases. With the permission of commissioner, this period can be extended to 6 months. And whosoever is the authorized officer by the commissioner, it can ask the registered person to provide all the necessary facility, because, and it is the onus of the SSC also to provide necessary facility to the audit officer to verify the books, accounts, other documents, or any other information they want, or render any kind of assistance so that audit is completed timely. So in a way, the onus of cooperating the auditor, departmental auditor, has been shifted to the auditee also, because it's a dual relationship. It cannot be a one-way thing. So auditor, whosoever is the authorized officer, the audit is supposed to cooperate him in full fashion, so that provide him necessary facilities so that he can complete the audit in a timely manner. And whosoever is the proper officer in that case, because there's a circular for proper officer also which has been given, which has been issued in the GST law at the time of start. So whosoever is the officer assigned for the purpose of audit, and whatever the findings of his audit, he need to communicate all those findings to the registered person within 30 days, within 30 days of the commencement of audit. So the process flow is very, it is very strict, and it is very time bound fashion. Time bound fashion is given for the purpose of completion of audit. So 30 days is the time prescribed for giving the observations to the auditee, whatever are the findings, and findings should be supported by the reasons also. It cannot be just they have given the finding and they are not supporting the reasons. So they have to give the reasoning also. And then subsection 7 says that whatever is the tax identified as not paid, short paid, or any refund which has been erroneously obtained by the assessee, or any ITC has been wrongly availed or utilized. So the audit officer only supposed to detect the those shortcomings or those erroneous refund cases, and then necessary proceedings under section 73 or section 74, which is the starts with the issue of show cause notice, are to be taken care by the audit team only. Although adjudication is to be taken care by the other team, the concerned jurisdictional officer, but yes, the issue of show cause notice is to be taken care by audit team itself, audit commissionerate itself. So this is the section 65, which is very crispy section, which is clearly defining all the timelines. There's no, kind of, as of now, I cannot see any kind of confusion in this particular section or any kind of litigation over this section. It is absolutely clear with regard to the place of audit, with regard to the time, with regard to the notice, with regard to the communication of findings, and with regard to the recovery. So this is section 65, which is the base section for the audit. Now, before we furthermore look into other things, other legal provisions, here is an important word which says audit should be done at the place of business of a registered person. So now what is the place of business? It has been defined in section 2, subsection 85. And there are two terms in the GST law which we commonly use. One is place of business, another is principal place of business. So principal place of business is defined as section 2, subsection 89. But yeah, place of business is defined clearly under section 2, subsection 85. So place of business, as we can see, normally which we understand is the place where the business is conducted. But yeah, here the place definition, if we see the definition, it is it is giving a more better coverage. It is giving a clear coverage that it is a place from where the business ordinarily carried on, or it includes a warehouse, godown, or any other place where a taxable person stores his goods, supplies, or receives goods or services, or both. Or it can be a place where he maintains the books of accounts, or it can be a place where he is engaged in the business through an agent. So basically, every kind of places which could have been identified in the business, because in business what happens, either there's a corporate office, and then there are factories, and then there are stores, there are warehouses. So all those situations have been, all those kind of situations have been considered while framing the definition of place of business. And normally books of accounts are maintained either at the factory or at the head office. So again, or maybe it sometimes happens that books of accounts are maintained at some other place. Because it happens in the case of company where there's a requirement to maintain the books of accounts at the registered place of registered office. And then registered office, in few cases it is like it is a residential address, or it is an address which is a place where the actual business is not conducted. So audit team, as we have seen, the audit can be conducted at the place of business, so they can choose any place of business, and they will specify in their notice also that how the audit has to be concluded, either at their office or at the place of business. And they will specify the place of business also, and they can choose any of the place of business which has been mentioned. And my friends, one interesting thing which I could see from this definition is that this definition is inclusive. It starts with the word includes. So again, I don't believe that this is an exhaustive definition. And if that is not the case, it may, because right now there's no mention about the residential place, the residential residence of the directors, or residence of the proprietor, or residence of the partners can be considered as place of business or not. But yes, the definition starts with includes. But yes, even if we see the word includes, I think the mindset or the theory is clear that residential addresses should not be included in the place of business, and we should read it in that consonance only with the words they've mentioned, where the business ordinarily carried on. So those places should be considered as place of business, although it starts with word includes. But yes, let us see if any litigation happens for this in future, or if this section can be it can be treated read in such fashion. So this is the place of business, and section 2 subsection 89 simply specify that the place of business, the principal place of business is the place which has been specified as the principal place of business in the certificate of registration. So we all know GST, there is a certificate of registration, And in that certificate, there's a principal place of business. We have to identify one of the place of business as principal place. So that is the principal place of business. So while undergoing the audit, there is no relevance of the principal place of business. I would like to just clarify that audit can be concluded at any place of business if the department officers wish so. Now, if so, because this audit can be concluded at the place of business of SSC also. So there we need to find whether there's any sufficient power to the officers authorized for the purpose of audit to access those business premises or the records of taxpayer. So yes, section 71 specifies so that whosoever is the officer who is authorized for the purpose of audit, he can he can access to the place of business of the SSC. So subsection 1 says that any officer authorized shall have access to the principal place of shall have access to any business place of the registered person. So again, there's no relevance to the principal place of business, any business place which you mentioned. And in few cases, it sometimes happens that business is actually done at a place, but that place of business is not included in the registration certificate. So to my understanding, when the definition of the business place of business is inclusive, so they may incorporate such places also, although they are not mentioned in the registration certificate. But those places where the business is ordinarily carried on, they should be included in the place of business. There's no mention that those place of business are necessarily required to be added in the registration certificate. So there's no requirement like that. So place of business, any place of business, even if it is added or if it is non-added, so officers, those who are authorized, they can have access to those place of business, and they have wide powers. They can inspect your books of accounts, documents, computers, because it's now a technology era. So gone are the days where documents are maintained in hard copy. Most of the documents are now taken care in the e-digital format. So computers, computer programs, computer softwares, whether they are installed in computer or not. So all those, they've included entire things. So all such things which the officer require for his purpose, so those should be available at those those place of business, and he can access the premises. It is clearly mentioned in section 71 that for the purpose of carrying out of any audit or scrutiny or verification or checks. So whatever possible situations can be there. So all those have been provided in section 71. And second subsection says that every person in charge of business place referred shall on demand make available to the authorized officer or the audit party deputed by the proper officer within 15 days of demand. So it is linked to the section 65, which says that the audit notice is supposed to be fulfilled the requirement. It has to be a 15 days clear notice, working days clear notice. So again, this section says that whatever documents have been asked by the audit team or by the authorized officer, they have to be provided by the person who's in charge of business place within 15 days of demand. So these are the few documents which have been mentioned that which are prepared by the registered person and declared to the proper officer: trial balance, statement of audited financial statements, cost audit reports, income tax audit report, or any other relevant reports. So the power to access the business premises is clearly given to the officers under section 71, which says that they can have a clear access to the business premises in order to carry out any audit, scrutiny, verification, or any other checks which they suppose it is necessary for the purpose of safeguarding the revenue, interest of the revenue. So these were the legal provisions with regard to the audit. And the process has been specified in Rule 101, which is also very clear. So period of audit has been specified in the rule, because when we read section 65 subsection 1, there it mentioned about the manner, frequency. So Rule 101 specifies those things. So Rule 101 says that the period of audit should be a financial year or part thereof or multiples thereof. So it is not necessary that every time audit team is going to come, they're going to cover entire financial year. They can cover even the part of the financial year, or they can even cover multiple financial years. So there is no foundation on the audit team. Secondly, they have to issue a notice in form GST ADT 1, so which is the first notice which the SSC receives for the intimating the SSC that your audit is going to be undertaken by the department. So that form is GST ADT 1. Then Rule 101 sub Rule 3 says that audit team can verify the documents on the basis of which books of accounts are maintained and the returns and statements furnished under GST Act and rules made thereunder. Then again, all those words, the correctness of turnover, exemptions, deductions, rate of tax, ITC availed, utilized, refund claims, or any other relevant issues, whatever are the provisions of law right from trans fund verification, transitional ITC, anti-profiteering, everything is covered within the powers of everything is power is given to the officers under section 65, that they can check all those things. They can check the compliance of all the provisions of the law. So the officers can verify all those documents on the basis of which books of accounts are maintained, and the rest of the returns and statements also. Then the proper officer who is undertaking the audit, he's supposed to inform the discrepancies noticed in the audit, and the person is supposed to file a reply, and then proper officer is supposed to finalize the findings of audit after due consideration of the reply findings. So it cannot be a case if the officer came and he just did his field audit, he completed his audit, and he framed the draft audit report, he got it approved from his senior authorities. It cannot be the case. They have to write the letter that this is the draft audit report. They need to give the intimation to the registered person, and registered person is he is given due time to file the reply to that particular audit report, draft audit report. And if in case, because it's a principles of natural justice, if in case there is no reply within the time specified in notice, then they can go for approval of the audit report, draft audit report. But otherwise, they cannot directly jump to finalize the audit report and finalize the findings. They are supposed to give the draft audit report to the audit team, to the audit team. Now, if the audit is concluded, then the last part, the proper officer is supposed to inform the findings of the audit in the form ADT 02. So ADT 1 is the notice which talks about the commencement of audit, and ADT 2 is the audit report format. So the earlier law, service tax, it also used there was no format although specified that, but yeah, the format of ADT 1 is almost same to that, and the department team is also using the old service tax formats only, all same things. Just an update that the form is now named as the audit report is now named as GST ADT 02 with IAR number mentioned in that. So same principles. Now, after going through the legal provisions, we must also understand the departmental hierarchy, because it's very important that whatever notice we are receiving, is it by the proper officer or not, or how the exact how are the officers of the department exactly placed across the country for the purpose of audit. How many departments are actually involved, because there are multiple wings of the department, multiple directorates of the department. So the principal responsibility of undertaking audit is DG audit, Director General Audit. They have a head office at New Delhi, and there are 7 zonal units at Mumbai, Ahmedabad, Bangalore, Chennai, Hyderabad, Kolkata. So there are 7 zonal units across the country, and the head unit is located. It has the main office is at New Delhi, and every zonal unit has an additional Director General. So this is one department. Now, after that, there is GST Audit Commissionerate. So wherever there are GST headquarters, like suppose in Jaipur there's a CGST headquarters, so there is a GST Audit Commissionerate headquarters also. Likewise, there must be the same in Mumbai also. So GST, and I'm sure Mumbai, there must be more than one audit commissionerates in Mumbai. There must be like one for LTUs and small taxpayers differently. So GST Audit Commissionerate is headed by the principal chief commissioner or the chief commissioner. Then there's additional or joint commissioner. Then there are different sections. So within that audit commissioner, there are different sections like legal section, compliance section. So there are multiple sections, MIS section, so planning section, coordination section. So there are DCs or ACs, assistant commissioner, deputy commissioner, who are the in charge of those sections. So these are purely, more of an administrative division of the responsibilities of the audit team. And then there are DCACs in charge of the circles. So within the commissionerate, there are multiple circles. There are multiple circles, circle 1, circle 2, circle 3. And then within those circles, there are multiple groups. Group A audit team, Group B audit team, Group C audit team. So there are deputy commissioners or assistant commissioners who are in charge of those circles. So like in this fashion, this audit commissionerate is designed that the principal commissioner is the top authority of the audit commissionerate. He is basically a link between DG audit and the audit commissionerate. And then the additional or joint commissioner, he takes care of few administrative tasks, right from approval of the paras or right from the, taking care of the issue of show cause notices and other things, because certain powers and certain quantums are devolved to him only, that he only can issue show cause notice. Then there are DCs who are the in charge section DCs. Then there are circle DCs, and circle DCs are primarily they are responsible for undertaking the audit. So the field audit is undertaken by the team of DCs or ACs. So they have a team of superintendent or inspectors, so they undertake the audit. So this way, the audit commissionerate has been designed at each of the headquarters across the country of CGST. Then there's executive commissionerate. Executive commissionerate is also part of GST audit commissionerate. They are linked, although they are different, but yeah, they are aligned to more or less to the audit commissionerate itself. And this executive commissionerate actually performs the operational task. So they are supposed to perform the audit. So they are a team of superintendent inspectors. So they perform the audit, they pursue the recovery, they ensure the show cause notice is issued, or majorly what they do, that they take the directions from the audit commissionerate, from the DG audit, and on the basis of their directions, their instructions, they are supposed to do all the execution based tasks. So they are supposed to attend the litigations also if there's a litigation in future. So they're supposed to do all those tasks. And then it comes the most important department, which is the key department as of now, that is DGARM. ARM means Director General of Analytics and Risk Management. So this has emerged as a new department, and in this particular era of artificial intelligence, this entire things going online, entire data of e-invoice, e-waybill, this what we call your toll plaza receipts, that this fast tag data. So everything is aligned and every data is analyzed, and then we are itself, we're ourselves doing compliance also. So entire data is taken, is given to this DGARM. They have access to entire such soft data, and then they perform risk assessments. They perform risk analytics, so that they can they can identify those teams. They can identify those assessees who are supposed to be audited. So DGARM nowadays has played an important role in any kind of notice, because most of the notices in the GST are system generated, and the data for those notices is given to them through DGARM itself. So DGARM is a data analytics wing, and they simply perform risk assessment based on the soft data available with them, and then they discuss it with the local team. Local team means GST audit commissionerate here. And then finally, the units which are supposed to be selected for the purpose of audit, they are selected. So this is the structure at department level. What is which we must know, that how the department is placed. And whenever the assessee receives the notice for the purpose of audit and section 65, it is issued by GST audit commissionerate itself. So the dealing person or the dealing phase for the assessee is GST audit commissionerate. DG audit is never directly involved into those kinds of audit or any client facing. But yeah, audit commissionerate, they are supposed to take care of the audits which have been assigned to them. So this is the management at department level. Now, how it happens, let us discuss in brief. Although I'll discuss the process in detail, but yeah, brief process I've just mentioned here, that there's a form ADT1, as I've already mentioned, which is supposed to be issued 15 days prior to the conduct of audit. And there the request is made to the registered person that he's supposed to submit the set of documents or records. They mention all those records and documents which is supposed to be submitted by the assessee. So form ADT1 is issued, and it clearly mentions that they mention there what is the time, what is the date by which the assessee is supposed to submit the documents. Now, supposedly, if I talk about the situation that there's no response to the letter, or maybe there's a response to the letter. So if suppose assessee do not respond to that letter, again a reminder letter is issued. But then again, if assessee fails to respond to that letter, then registered person, and then it is assumed by the department that the registered person is not volunteering to submit the details. He is not interested to submit the details which have been called by the ADT1. And in that case, another letter is supposed to be issued to the registered person, and there the penal provisions are also supposed to be quoted. So ADT1, there is no reference to the penal provisions that you are not complying to the notice of department, and a department can invoke the penalty under section 122, 23, or 25, whichever is the case. But yes, after a reminder letter, if you are not submitting, the auditee is not submitting the requisite details, then the case is like the penal provisions are to be incorporated in the reminder letter, and again another letter is supposed to be issued. And supposedly, if the assessee fails to reply to that letter also, then there are repercussions. Although department has multiple powers, either they can refer the case to the DGGI, which is respective intelligence department, zonal units. They can refer the case, or even there's a mechanism in GST law which is already, although not effective, GST compliance rating. So they can refer the case for downgrading the GST compliance rating also, although it is not effective as of now. But yeah, the biggest risk is that if the assessee is failing to reply to the notice, the case can be forwarded to the concerned jurisdictional officer, for detailed verification of the issue of show cause notice, or to the DGJ department for the purpose of search survey operations. So I would suggest that such kind of notices should not remain unreplied. Now, I read that a particular manual which has been given to the GST audit team for the purpose of conducting audit. Now, they have been given few principles how they have to conduct the audit. They have been given few guidance on what premises, on what thinking they have to conduct the audit of SSC. And if we see these principles, they are more or less like which have been given to the which have been prescribed by ICAI for the chartered accountants to conduct the audit. But how far they are practically followed, that is little different. I find little challenges in these things only, because department is making all such paras which are unnecessarily, which are not required necessarily, because it was first year of GST, July 17 to March 18. There were multiple technical glitches. There were multiple procedural failures. We are all aware of those procedural failures. And although, and given the fact that there was no readiness at the end of the department with regard to their system, with regard to their portal. So, but still, the audits are conducted in a fashion that GST was perfectly all right, and SSC is absolutely at a fault. But yeah, so this gave me, and this forced me to read what are the principles of audit, what have they been guided in the GST manual, audit manual. So what they have been guided that you have to conduct the audit in a systematic and comprehensive manner, which I'm sure we all must be knowing, chartered accountants. Emphasis on the identified risk areas and scrutinizing the records maintained in normal course of business. So whatever records are required to be maintained by the SSC in normal course of business, they are the officers are required to scrutinize those records only. Any abnormal cases, like once in a month or once in a year or once in 2 years, you are supposed to maintain a record. Or if it is not in normal course of business, if it is once in a lifetime of the business, I'm sure that will not be considered as that you are not complying with the maintenance of records principle. Then audit techniques must be applied based on the basis of materiality. So this is again a principle of ICAI, or all the auditor standards prescribe same. So materiality is the concept which has to be followed with the audit officers of department also. Proper recording of all the checks and findings. So this is with regard to documentation. And identifying the unexplored compliance verification parameters. So this point says that whatever are the unexplored points, so department team is supposed to find more, and they are supposed to give new findings each and every time. So it cannot be the case that they are simply following one particular audit para of the SSC for the last year and they can simply copy paste. Yeah, they can copy paste if the same para exists in the current year also. But yes, they're supposed to identify unexplored compliance verification parameters, new points which may exist in the case of SSC. And then the most important part, that they have been guided to educate the taxpayer also for voluntary compliance. So I find that there's a responsibility on the part of the audit officer that he is supposed to educate the taxpayer also, that you go for a voluntary compliance, this can be the situation, and if you don't go for a voluntary compliance, this can be a situation, or you have been doing this wrong and you should improve it in this fashion. So audit, as we see in our case, when we talk about a chartered accountant or any audit under any law, so we are like, it's more of a kind of it's not just a pure audit, it is more of a fact finding, observations finding, and then educating the taxpayer also. The same principle has been adopted by the GST department. GST DG audit has issued this GST audit manual 2019. Same principles have been adopted, but I'm sure, as far as I understand, as far as my experience is concerned, the last point, educating the taxpayer for voluntary compliance, is hardly missing. They are not at all involved in any kind of education, and they're simply finding out the paras, and I am sure because they have a very strict timeline. So they have been guided to do very well if we read it theoretically, but practically things are a little different. And other guidelines have also been given, so that auditors, they are not supposed to simply take care of or they're not supposed to go absolutely by books. They need to understand the prevalent trade practices also, what are the economic realities, what is the business environment. So they need to consider everything while performing the audit. It cannot be just one thing. Then they have to opt a balanced and rational approach. Then if there's a clear mention that if there is any technical infractions without any revenue implications, arising due to bona fide oversight or ignorance of the registered person, the registered person should be guided for immediate correction. So technical failures or any kind of bona fide error on the part of SSC, which is very common at during the start days of the SSC of the GST 2017-18, because right now the period they are picking for audit is right from 2017-18 itself. So I think this point should be taken care by the audit team, because there were technical infractions and there were multiple failures on the part of GST and also on the part of SSC also, and they were all bona fide, they were not all mana fide. So those ignorances, as the guiding principle says, that the auditors they are supposed to guide the auditing for immediate correction. And plus, so to my understanding, when I discussed with one of the principal commissioner here, he said that we have a power that in case there's no revenue implication and there's just a procedural part, we can even plan to drop that para based on your reply. But the practical reality is that the ground level team, or when we talk about that the executive team, which is comprising of superintendent or inspector, they are not in that mood. They are simply assuming that everything was perfect since the start of GST, and there was no technical failure, there were no technical glitches or any kind of problems at the end of GST, and anything which has been done by the SSC due to inadvertent error or oversight, it's all failure on the part of SSC. And suppose they take the case in that way, so they are invoking the provision of section 74 or 73 and 74 even in some cases. So they have been guided differently, but the practical reality is a little different. Plus, the focus should be on the business records of the SSC. They are not supposed to do any kind of checking of your personal records. They cannot go beyond their scope. They cannot, just suppose if they have come for the audit of the partnership firm, they cannot go for the, they cannot ask for the records of the partners. So they're supposed to audit the business records only. And then they have to ensure the confidentiality also. So confidentiality is also on the part of their end only, because most of the details nowadays are asked in soft copy only. They are not accepting hard copies, and they have also the entire system in place, which is entirely system based. Even the paper working at the end of department is reduced a lot, and in that case they are supposed, and they are asking for the tally data or SAP data or any kind of other accounting data, so they are supposed to ensure the confidentiality of details of data which has been submitted to them for the purpose of audit. So these have been the guiding principles. I'm sure more or less they are similar to what they have been prescribed, what we have been prescribed by the ICAI. But yes, when we talk about our audit and when we talk about the department audit, things are a little different. So because they are following a pro-revenue approach. So moving forward, indicative duration of the audit. So the duration of audit has also been prescribed for the purpose of large taxpayers. So they have divided the taxpayers into three categories: large, medium, small. So for the purpose of large taxpayers, if there's only one financial year involved, 6 to 8 working days. Medium taxpayers, 4 to 6 working days, and small taxpayers, or the cases where there are TDS or TCS compliance, section 51, 52, they are asking for 2 to 4 working days only. So this limit is applicable in case of one financial year, and if there is any increase in number of financial years, then this limit will also increase by 1/4. So 6 to 8 days, if one financial year is added more, so 25% time will again increase. So this way they have given the way that one financial year pay 1/4 time will be added. But okay, and this particular time limit, 6 to 8 working days or 4 to 8 working days, it covers right from the time when the audit commences, that all those documents have been submitted, and it covers all the days also. So suppose the audit officer visited your SSC's auditing premises for a day, that particular day, and then he completed the audit at his desk. So entire end-to-end time is 6 to 8 working days, 4 to 6 working days, or 2 to 4 working days. I find it a little less, because in a cases where there are large taxpayers, they are large includes everyone. I think Reliance is also large, and if we talk about those commercial capital of the country, there are multiple large taxpayers. So the time limit which is given is little less when we see the size of the company. 6 to 8 working days is very less, and that is why most of the audit teams are under immense pressure. Departmental audit teams are under immense pressure when they start the audit till the time they end the audit. They themselves are under pressure, and they put the pressure on the SSC as well as their consultants also. So and then you see the timelines again, that they have to communicate the findings within 30 days, they have to complete the audit within so much days. So it's a very time bound program. They have been followed up very rigorously by their senior officials. What is the status? And then again that pressure comes on us only. So I find it little less because, for a person with any category large taxpayer units, 6 to 8 working days are very less, very less. So maybe because, team, they have ample data before they start the audit. So maybe they have thought of the let's keep the effective working days with the SSC to some less numbers. Now selection is the important part. So till now we have discussed the legal provisions, the placement of departmental hierarchy, and then briefly discuss the process, and then we have briefly discussed the duration. What are the guidelines which have been given to the department auditors while they conduct the audit? Now here comes the important point, which is selection of unit. So now how they are selecting the units, how the process flows, how we can say that this particular SSC can be selected for audit or it may not be selected for audit. I think there's it's not a comprehensive list, but yeah, I have tried to include all those understandings which I could find from the GST audit manual of the department plus my practical experience. So how it starts, the first and foremost thing, revenue risk assessment process is followed, which comprises of various risk parameters. So what is the meaning of revenue risk assessment? That how much risk to revenue is attached. So they simply first of all see that this is a particular SSC. If supposedly if something goes wrong in this SSC, what can be the revenue leakage? What can be the revenue loss to the department? So they start with this particular theory that there is a risk to revenue, and then they start assessment of that particular SSC who has been selected based on some data. And this is, I'm talking about the first stage. This is all done by DG audits. So they, they have multiple risk parameters. Based on those risk parameters, they assign certain scores to the SSC. It's a kind of internal rating process, and then the revenue score of the risk score of the SSC is determined. Now that particular evaluation method, as I've told, it is prescribed by DG audit, and the DG audit, the Director General Audit, is not the only department as of now who can simply access to the entire data of the entire country, and then they can manually do this. So they have been very well supported by the DGRM, which is the Analytics and Research Risk Management team. So this analytics team, it prescribes they consult the audit team, and then they derive an evaluation method that how the particular revenue risk is to be evaluated. And this keeps on changing every year. It cannot be a straight formula entire year, because for 1 year they may be they may opt some other risk parameters, for another year they may opt some other risk parameters, or they may assign weightage differently to each of those parameters. Because like suppose if we talk about the last year, it was a COVID year, so maybe if it was a COVID year, the parameters may be a little changed or as compared to a non-COVID year. So it keeps on changing every year. So based on those risk evaluation or risk assessment methods, there's a list which has been prepared of the SSCs. So it's a master list, it's a universal list which is prepared for the particular audit commissionerate, and that audit commissionerate is communicated about those SSCs. So till now, it does not mean that if the list has been communicated to the audit commissionerate, they're mandatorily required to be audited. So now audit commissionerate, which is a local headquarter office, that role, the role of that office comes into place. So now that GST audit commissionerate, they may select a unit. So they have been given an optional power that they can select a unit after reviewing in context with the local risk perceptions and parameters. So now audit commissionerate is aware of the SSCs in a better way as compared to the DG audit or the New Delhi office. So GST audit commissionerate has been given the power that they can select the unit. So the names which have been received from the GST DG audit, they will review those names with reference to the local risk involved, local parameters involved, any other information with them, any kind of data with them. They will review that particular list, and then they will select out of those out of the list. They will select the SSCs for the purpose of audit. So mandatory condition is that out of that particular risk, out of that particular list which has been given by the GST DG audit, so out of that particular list, 20%, minimum 20% of the taxpayers are supposed to be selected based on local risk factors after obtaining the approval of Chief Commissioner. So Chief Commissioner is the head of the GST Audit Commissionerate. He is the link between the Audit Commissionerate and DG Audit. So he gives the approval finally that this particular SSC should be selected for the purpose of audit on the basis of local risk factors, local risk perceptions, or any other parameter, or any other information which he is having. So 20%, minimum 20% are to be selected on that particular base only. So it cannot be simply a case that DGARM is showing a list and then they are supposed to mandatorily do the audit of that particular assessee. There are certain powers to GST Audit Commissioner also that yes, this particular assessee is to be selected for audit or not. So in this fashion, this particular selection takes place. Now selection takes place on the basis of a risk assessment procedure. So what are those risk factors? So I have prepared an illustrative list. What kind of risk factors are taken into consideration while selecting an auditing? So not providing or delaying in providing documents. So it can be the case that supposedly your assessee, he has been asked multiple times during service tax regime or during GST regime for providing this information or providing these documents. These days, though, they are now, normal notice ASMT 10 or, 3B or 2A difference. So these notices keeps on coming regularly and they're all recorded in the GST portal. So they check that how is the compliance parameter of the assessee while replying to those documents. So either they're replying to those documents or they're delaying every time or they are not at all honoring those notices. So this is one of the factor which is taken care. Similarly, factor can be that when it was last audited or their e-way bill, e-invoice data, because it's now, because the data availability with department is immense. They have immense data, they have huge data. So they can check that how the transactions are placed on e-way bill portal, how the e-invoice portal reacts. And I'm sure you must be aware nowadays e-invoice portal is also floating the mails. They are also sending mails that yes, they have identified certain error codes, like I think 20 or 25 error codes. And then in those error codes, there's an error and there is a solution. Both are mapped to in that Excel sheet, in that PDF document, which you're sending to the assessees. And it says that your particular case, the mail says that your particular case is these two identified errors, and you should take care of these errors in future. And there's this solution, whatever is possible, you can take. So I was reading one of the mail of my client. It was like, you have tried to attempt the generation of IRN of a particular invoice multiple times. So they mentioned that there were 11 documents which you tried to generate, which you tried to upload multiple times for the purpose of generation of IRN. So this is the level of data analytics with the team, that they are able to catch that particular data also, that how many attempts you have made, and then in turn they're now sending the mails to the registered person also that yes, you are doing this error continuously, and kind of a monitoring mail that we are monitoring it, so please take care of those things and do not do these things in future. So data analytics, data availability with department is immense. They have huge data. So yes, your e-way bill data, your e-invoice data, I've seen multiple clients here who keeps on differentiating between the values of e-way bill and tax invoice. So while filing e-way bill, they have different data. While filing the tax invoice, they have certain other things, data changes. So this can be a very important parameter for the purpose of selection of your case in audit, in department audit. Likewise, in many cases it happens nowadays because GSTR1 is auto-populated based on the data of e-invoice. So now assessee keeps on changing the data of GSTR1 because law allows same, although there is no provision under law which bars them to change the data or to file a correct data. And because there are limitations in the e-way bill and e-invoice both to amend or cancel the data which has been submitted to these portals. So now what happens is that that data keeps on giving a red flag to the department audit team, and then they keeps on reviewing that data. Obviously, that entire access is taken care by DGRM. But yes, this can be an important factor because with the advent of technology, with the advent of e-way bill linking to e-invoice and then linking to GSTR1, and then they're linking to GSTR 3B also nowadays. So I'm sure this is going to be a very important factor while deciding the assessee for the purpose of audit. Then, there's another factor that assessee is just newly registered or it has multiple branches. Likewise, there can be a risk factor like what is the size of turnover, what is the refund claimed by him, previous year deviations, what kind of exemptions are claimed, what is the assessee involved in any kind of high risk activities like real estate, restaurants, hotels, which are dealing in majorly in cash, rentals, which they are not showing to the in the books, or which are doing is showing as residential renting, which is actually a commercial renting. I was a little surprised to see professionals also, because this is a list which has been generated from on the basis of this GST audit manual, and then typically high risk activities they've included professionals also. And I was a little surprised why professionals are included in high risk activities, because we are very simple, straightforward system of invoicing and then taking ITC. But yes, they've included high risk activities. They've included professionals also. So car rental. So this is an indicative list which has been given in GST audit manual itself, which says that if there are high risk activities assessees, they may be selected for the purpose of audit. Then they keep on evaluating the ratios also, like how much is your expense, how much is your turnover, expense to turnover ratio, turnover to total assets ratio, loan to total assets ratio, net profit versus that particular activity, what is the quantum, what is the ratio, exempt supplies upon total supplies ratio. So there are multiple ratios which are evaluated in the DGARM system. And then there's a local risk management section also, which also helps the DGRM team to provide more and more data. Combinedly, they evaluate all those risk factors and then they select the assessee for the purpose of audit. Now, again, there's a factor like irregular compliance. Supposedly, if the assessee is habitually irregular, he is always filing GST returns late, not filing on time, he may be selected for audit. Or they have information that the assessee, it has certain legal disputes, or the audit commissioner has information that it keeps on receiving notices from other government entities and they're not honoring to those notices. So other government entities can be, it can be income tax, it can be company law, it can be, any statistics department, it can be anyone. So every information, they are not aligned in such a fashion that they have access to that particular data, and they can immediately say that, yeah, this is your position at the other levels, and then you're irregular there. So your case may be selected for the purpose of department audit. And this again, the 8th point, questionable consultants and accountants. This is again a factor which has been given in the list itself, that yes, this can be another factor for the purpose of selecting an assessee for the purpose of audit. If they are chartered accountants, or if they are consultants, or if they're whosoever is their consultant or accountant, if they are questionable, because I mentioned, that 20% of the assessees are to be mandatory selected on the basis of local risk parameters. So yes, DG audit must have floated a list, but now if the local GST audit commissionerate, if he thinks that, yeah, the accountant is the suppose XYZ company, they are auditing those books, and this auditor is actually questionable because they have been identified in some other cases also, they have been booked in some other cases also. So they may select that particular assessee for the purpose of audit. So our work, the way, how we are reputed in market, how we are placed in market, it may be another factor for the purpose of selection of our assessee for the purpose of GST audit. So yeah, and this is mentioned in GST audit manual itself. Then again, there may be factors like how much your turnover increased after GST, because in few cases it was found that pre-GST turnover reported to department was very less, but as immediately GST was implemented, the turnover immediately it shooted up. So if there's an abnormal increase, or supposedly the case like that, there's a TDS ledger. So in TDS cash ledger, there is a TDS amount, but still the assessee is irregular in filing 3B, or they are not filing 3Bs, or they are habitually late in filing 3B. This can be another factor. So these are all local risk factors. So DGARM do not evaluate these risk factors. These risk factors are to be evaluated by the GST audit commissionerate, because they have access to all these data, and they keeps on they evaluate the list obtained from DGARM, DG audit and DGARM, that all those, just illustrative is that how assessee is placed in these local risk factors, and then that particular assessee may be selected or may not be selected for the purpose of audit. So yes, this is a big risk, because in a few of the points which I could see here, they were little surprising to me, that first is this high risk activities, professionals are high risk activities, and then questionable consultants and accountants is another factor which for which your assessee may be penalized and he may be selected for the purpose of audit. Now, we have discussed how the particular assessee has to be selected for the purpose of audit. Now, there's another concept which has been mentioned in the GST audit by department, is theme-based coordinated audit. So what is theme-based coordinated audit? So right now they haven't done any kind of theme-based coordinated audit, apart of, because I have just seen such audit in customs, not in GST. So theme-based coordinated audit means which is which has to be taken care by multiple commissionerates together at all India level, and the theme is given by the DG audit team itself, head office itself, DG audit itself, that this is the theme, this is the particular transition, or this may be the particular particular modus operandi which has to be audited. So it can be anything, or this may be the particular commodity, and all the assessors of that particular commodity are supposed to be audited. So they can select any theme based on their methodology, analysis, and they obtain the data from DG systems. So, and economy, and then third party information, multiple factors are there, any other source can be there. So they select the particular theme, and in that case, they are supposed to audit across the country for those kinds of businesses together. So instructions, whosoever, whatever is the theme-based instructions are supposed to be given as per the GST audit manual, they are supposed to receive the instructions in advance, 4 to 6 months in advance. And these audits are not to be taken on a regular basis. They are supposed to be maximum 2 in a year. And so this is done, this is a theme-based audit by DG audit. So similar fashion, similar power has been provided to the GST audit commissioner also, that they can also select their theme-based audit program if they have, they could look for some risk. So supposedly there were a few cases of re-import in customs. So there was a case that the goods which were exported on consignment basis, they were imported and they were irregular treatments. So assessees who were dealing in those re-imports, majorly the jewelry sector, the audits of all those jewelry sectors in Jaipur, if I talk about Jaipur, so they were all issued notices, all issued, they were all undertaking the audit procedure at the same time. So that was a theme base, which was approved by the GST Audit Commissioner here at Jaipur, that yes, all those kinds of cases where there is a re-import, where the goods were exported earlier on consignment basis and goods were imported, the officer is supposed to check, and they need to find the finding, given what is the exact position, whether it has been done correctly or not. So those theme-based audits are not necessarily to be floated by the DG audit only. They can be selected by the local GST audit commissionerate also, and obviously they have to take the approval of principal commissioner or chief commissioner. Then they can go for those theme-based audits also. So it happened in customs that I talked about, and there was a violation of Rule 96, sub Rule 10 of GST law, which said that there was a restriction on IGST-paid exports. Those who cannot export on payment of IGST, there were certain restrictions. So across India, whether it was Chennai, whether it was Mumbai, or whether it was Jaipur, across India, all the customs commissionerate cases were pegged, and they were, they simply sent those reminder letters or letters mentioning that this much we have imported, because they have already data available, at this much you have imported on exemption basis or on concession rate basis, and then you have exported on payment of IGST, which is in violation of Rule 96 sub Rule 10. So that particular process was entirely taken across India. So I found that I feel that was a kind of theme-based audits. So yeah, they are floated at a larger level, maybe by the DG audit or by the GST audit commission. Not yet done in any case in GST till now. So this we have already discussed, but yeah, little detail, that intimation to be given. Then the officer is supposed to review the data, which is which they have already received from GSTN, and then they need to plan the audit. So this is known as desk review. There's a term called desk review. Desk review means the audit is done at the place of department office. So this means desk review. So when you find the audit report, you will find there's a column how the audit was undertaken. They mentioned desk review. So it is a process where whatever the data they're receiving from the particular source or their particular head offices, they review that particular data. Then they frame the draft audit report, or they they verify the books of accounts. They call the information from assessing 881. They frame the draft audit report within 10 to 15 days for MCM. So there's a new term, MCM, which is monitoring committee meeting. So this meetings or this MCMs are very important. I'm sure those who have already gone for these audits, department audits in service tax era, they must be aware that these MCMs are very important. So draft audit report is prepared, which is communicated to the assessee, and then this audit report, there's a time frame, as I've already mentioned, that the discrepancies are supposed to be communicated to assessee within 30 days. And then after the 30 days, they give time to the assessee to reply to those audit paras, draft audit paras. Then within 10 to 15 days, they have to prepare the audit report. They have to finalize whatever the replies received from assessee. They prepare it for the purpose of MCM. Now, MCM is a meeting which is it is a kind of monthly meeting. It is supposed to be held every month as per the guidelines issued to the audit commissionerate, which is presided by the principal commissioner, chief commissioner. They are joint commissioners of audit. They are executive commissionerates, and all the officers of audit commissionerate which are involved in the particular audit. And it's a joint discussion. So they examine the audit paras of particular audit. And it's not just one-to-one audit discussion. There's a list of audits which have been undertaken by multiple groups or multiple circles. So there's a common MCM for all those discussions. So they examine the audit paras in MCM, they revert, they discuss, the principal commissioner, the chief commissioner, the joint commissioner, they give their comments, and the decision is taken like whether this para is to be continued or this para is to be dropped. Or supposedly if the department internal system says that yes, if there's a discrepancy in that particular para, they may even say that they need more information, and then next MCM the para will be taken for a discussion again. So the audit paras are very thoroughly examined in MCM, this monitoring committee meetings. And if once the para is approved in MCM, final IAR, final audit report in ADT2 format is given to the SSC. So there's a timeline that this final AIR has to be given within 30 days of MCM. So when the MCM is concluded, audit paras are approved, final AIR is to be given to the SSC within 30 days. So this is the process flow, and how they prepare the data. That is again important, because how much data they have, how they're evaluating things, how they're preparing, how they're verifying, and then they're finalizing the audit report. Here you can find that how much data access they have. Suppose first of all they profile the auditee. So profiling itself, there's a big format which is given in the GST audit manual. So if you see that format, you will find that there are multiple things. Profiling is not just write the name, address, and GST and major details. They have multiple data already available with them, your income tax records, your company records. Based on that, they're supposed to profile the auditee. Then they do the DEX review. It is not the stage where the audit, then they review the data. So review, post that review, the audit is allocated, and then there comes the concerned executive commissionerate into picture, which reviews the particular audit which has been allotted to him. The desk reviews such data. So that data can be including everything, your cost records, because cost audit reports are also filed, your bank statements, your trend analysis, revenue analysis, your any kind of stock statements you are submitting to the bank. So they have entire access to the data, and they desk review such data. Accordingly, they are supposed to plan the audit. Then they verify. Another one point which has been specified in DGRM, that they're supposed to verify the internal control mechanisms also. So they have been guided with few techniques, which we have also been guided ABC walkthrough. So they are supposed to not just verify your books of accounts or verify your data or verify the non-compliance. They're even supposed to evaluate the internal control mechanism at place in the with the registered person. So if there's a weakness in internal control which has been identified, it becomes one of the factor, it becomes one of the risk factor for the purpose of deep checking. So internal control in every era, right from how the material is received, how you are doing your transactions, are your business outward supply supported by purchase orders, or if it is service sector case, then whether there are proper agreements, or it is just a normal case, whether the supply is only to registered parties or related parties. So there are multiple, how the process of job work is undertaken, this is absolutely operational internal control. I'm not talking about the financial or accounts based internal control, operations. So now suppose the material is, if there's an incoming of material, then how material is particularly whether there's a GRM system or not, whether there's a system photograph of the vehicle, or how the transaction is recorded in the books, which kind of accounting software is used. So there are multiple questions which have been given to them, and I'm sure if you read that GST audit manual thoroughly, properly in detail, you will find that they're supposed to actually evaluate your internal control in a way the stat auditors in case of companies are supposed to evaluate. So this gives them a glimpse that how the company is actually placed, how what is the risk level involved. Then they are supposed to do the physical verification of documents also. So in case of a desk audit, they will ask you for the documents. Otherwise, they will come to the factory and they can verify those documents. Then working papers and then draft observations are supposed to be sent to the SSC. So this is the stage. It was preparation to verification. Now, once the IAR is prepared, so they have been given guidelines for the IAR also, section 65 Department Audit. So IAR is supposed to be concise, to the point, and whatever reply of the SSC has been received, it has to be incorporated in the IAR. So please make sure that whatever reply, in case you have given for the audit report and writing draft audit report, make sure that whatever is the final IAR, your reply is incorporated in the IAR. If it is not incorporated, definitely we can write back to the department that this was a reply submitted by us, and it was discussed, but it was not included in the IR. Draft audit report is, as I've already mentioned, it has to be completed within 15 days. Now this draft has to be placed to MCM. MCM either approves or disapproves the audit para. So they've identified that these are the audit paras, these are finalized for the purpose of show cause notice, and then final IR is given to the auditee. And supposedly, if SSC admits to few of the paras, they ensure recovery. They are supposed to ensure recovery. For those which are unaudited, unadmitted paras, or those who are litigative matters, in that case, show cause notices support proceedings has to be started by the audit commissionerate. But yeah, adjudication, as I've already mentioned, adjudication will be taken care by the concerned jurisdictional officer only. So the audit commissionerate has no power to adjudicate your case. So even in a case your assessee is receiving show cause notice from audit commissionerate, they clearly mention in the notice at the end that the reply to this particular notice is to be furnished to the so and so your jurisdictional commissioner, and they write the details of jurisdictional commissioner also. So make sure that no reply is supposed to be furnished to the audit commissioner, although the notice is issued by them. And suppose there's a case, your para, your client has a case that the para has been approved in MCM, but yeah, you find that there were certain discrepancies, or maybe your reply was not considered, or maybe audit team evaluated data in some different manner, because these days it's a desk audit, more of a desk audit, because they've been given powers to do the audit in their office only. So there are desk audits prevailing now. So those desk audits, what happens? You send an Excel sheet to department, they evaluate in a different fashion, and I'm sure we are talking about a period when there were huge, the people were not very well aware of what kind of data is actually supposed to be maintained. There was unregistered person, 9 subsection 3 reverse charge, there was 9.4, there were multiple things, there were irregularities in 3B also. So what kind of data, what kind of reconciliation is actually required to maintain? Or maybe it happens in some case that the assessee send those reconciliations as it is. They treat is that they may treat that it will facilitate the auditor, department auditor, and understanding the things that what kind of treatment they have done. There were mismatches in 3B and 1. They were actually rectified in 9. But yeah, when the reconciliations were submitted, maybe the audit team, they may forget to consider those reconciliations, and these kind of thing happens. But I would strongly say that whatever is representation, whatever is your reply, please make sure that you submit those replies, to the draft audit paras before MCM. Do not delay it beyond MCM, because any reconsideration is MCM. If you want that any para which has been approved in MCM, if your assessee wants that it should be reconsidered, it is very tough, because first thing that the officers at the lower level, they are not at all interested. Once the MCM is done, para is approved, they have simply two targets: either to issue show cause notice or to pursue for the recovery, nothing more. Even if you say that you have taken a wrong data, you have taken we have rectified data, they will clearly mention that either, sir, we'll issue a show cause notice, you reply there, but they will not at all go for reconsideration in MCM. Although the law says that reconsideration in MCM is possible, but yes, it should be within some time frame. It should be done most expeditiously. They've used the word most expeditiously, and they've even mentioned that within 1 month. So suppose assessee finally received the final IAR, and final IAR, there were certain paras where the reply of assessee was not considered, because IAR is supposed to be a document which should include the facts, the observations, and then finally the findings, and then finally the reply of auditee. And by the officers not agreeing to the reply of assessee, then this is the final amount. So it's a kind of it's although concise, but it's a clear-cut analysis. Even the assessee, if the assessee has quoted some of the judicial case laws, he's supposed to incorporate those replies of the assessee in the audit report, final IAR. But it happens that they do not consider it many times. So if the assessee wishes to get it reconsidered in MCM, it is a little tough, because post MCM is done, para is approved. The lower officers, the executive officers, they are not at all ready to take the file again for reconsideration into MCM. So just make sure, although the permits, but yeah, make sure that whatever is your reply, it is considered before the MCM is done. And this MCM is these are monthly meetings, and they're very quick. They're extremely quick. Like suppose it happens like audit is started on 26th of February. It was completed by 1 or 2 of March. and then there was MCM on 8th. So assessee is supposed to reply between 2 to 8 only. It's a very less time. In few cases, it happened in Jaipur also, that they just mailed the audit report. There were COVID restrictions. Nobody read that particular mail. Assessee did not respond to the mail. MCM held virtually and para approved, and final IR was also issued. So we made it a point that how can you do this? Because first thing, that suppose your audit team is ending the audit, field verification is ended on 2nd, MCM is taking place just next on 8th, just 6 days time. How can it be taken for the purpose of discussion at your MCM when your system internally says that once we approve the parent MCM, we are not going to change the IER. It will be taken to IER 100%. And reconsideration law permits, but your team is not doing. So I would say ki just whenever your assessee is being audited, make sure that those particular time of 15-20 days, be in constant touch with the department person, whoso is a superintendent, that the para is at which stage is the audit exactly, whether it is approved in MCM or not. Because once it is approved in MCM, you reply, it's not going to make any sense. Now, documentation part. So I mentioned to you that they have plenty of data, they have ample of data. And what kind of data they have? They have all kind. They have your audit report, P&L, balance sheet, income tax filings, whatever you're doing. So they have access to all those data. So they have been guided actually that what kind of things you should see in that particular data. So supposedly, annual report and director report. So annual report, what they're supposed to find, that what kind of qualifications are there in that audit report, which have a bearing on GST liability. So any kind of qualification which the auditor is putting and which is a bearing on the GST liability of the assessee, that maybe that they're supposed to review thoroughly. So I remember when it was the first year of GST, it happened that there was no reconciliation, there was no input reconciliation, output reconciliation, and many of the CA firms in Jaipur, they were putting a qualification in the tax audit report or in the stat audit report that balances of ITC of GST or balances of output tax are subject to reconciliation. We have not been provided sufficient information in order to comment on those figures. So this kind of qualification, it is directly linked to GST. So it is affecting your GST liability. It might affect your GST liability because already auditor has mentioned that the assessee has not provided any kind of GST reconciliation in order to ensure that what are the figures of ITC and what are the figures of output tax. So in that case, those qualifications which you have given, they may have bearing on the audit of the assessee when it is taken by department. Then again, those entities on which CARO is applicable. So again, fixed assets position, what is the mechanism of physical inventory verification, what is the mechanism of disposal of damaged goods, what are the disputed liabilities of various laws. Again, this is a very important point because it is not just in CARO, it is supposed to be mentioned that what are the disputed liabilities. So the audit team has been guided in the manual that you are not just supposed to check the disputed liabilities of customs or indirect taxes only, or GST or other indirect taxes. Even you can check the disputed, you should check the disputed liabilities of other laws also, because they may have bearing on GST also. So it happened in many of the cases, supposedly, like there were bogus purchases transactions in income tax, and bogus purchases transactions in income tax were confirmed, and tax liability and income tax was determined, and they were mentioned in CARO as disputed liabilities because they were under dispute. Assessee was not agreeing to it. Cases were under already litigation. So those liabilities, if the income tax officer has treated them as bogus purchases, I'm sure you must understand that there's a direct bearing on GST, ITC figures, and because purchase is a big figure, and input tax credit on purchase in case of a trading firm or in case of a manufacturing firm, it's a huge figure. So whatever is the annual report or auditor report, or director report is there, the department team has been guided to check all those qualifications, all those serious comments in the CARO which has bearing on the GST law. Similarly, if we talk about P&L supplies which has been made by the assessee, their nature, their valuation, their rate, these are normal things we all understand, which we have been also doing while doing the audits under section 35 subsection 5. Similarly, reverse charge mechanism under section 9.3 or 9.4, this is a very critical component of the P&L. So I've just mentioned those things which are very critical, which they are directly going to verify and which they've been guided to do so. So While so before submitting data, because this is important to discuss, because when the mail is sent or when you receive a notice for the purpose of submission of data, before you submit the data to department team, just check these points at your end also, because we are the consultants. Maybe business person may not be able to understand these things, but yes, these things have a direct bearing on the paras also. So like balance sheet, suppose the balance sheet, what they say that if there is any holding or subsidiary or not. And suppose if there is any holding or subsidiary, then if there are any transactions, or then if there are transactions, then what is the valuation mechanism? Then fixed asset schedule. It is very important to see they check that whether you're made in sale of goods or not. Then there's document notes to accounts, which normally people understand that maybe there's nothing in notes to accounts, but yes, department team or department is guided audit team that your notes to accounts are very important, and this can be used for finding various other informations like which are the related parties, whether any goods or stock has been used for non-business use, also non-production activities, or you can find even the major activities. Suppose assessee may not tell that there was a fire in our company, and as per the provisions of section 17 subsection 5, assessee knows that if I tell this particular thing, then they will ask for reversal of ITC. But yes, if department team reviews the notes to accounts, and if they have been audited properly and if they have been framed properly, I'm sure there must be a mention in the notes to accounts that these are the major events which happened, like due to which our records destroyed, or there was a major fire, or there was a major expenditure in research and development. So there are multiple things which are not all the quantified, but these are informations which are given to the which are available readily to the department team, and the department team they reviews these informations properly. Then in the case can be that they can make directly paras, or they can have better findings. They have better findings. So trial balance. So trial balance, I have not mentioned anything about trial balance because I'm sure we must be aware of the trial balance. It's a detailed record, and they ask for trial balance every time. Whenever you are submitting the records for audit, they will ask you for the trial balance, because in P&L they're already grouped. Many of the expenses are grouped in the one head. They're not properly named. So they ask for a trial balance. So if you give them a detailed trial balance, they will surely check all the ledgers. If there is a negative balance, supposedly if freight outward the freight is the ledger, and there are debits also and there are credits also. So this ways, they can again go for section 15 evaluation in the inclusion in the transaction value. So all those things can happen in case of trial balance also. Cost audit reports, again, they're very important. Those who are audited, those who are supposed to get the cost audit done as per the law. So again, that cost audit report gives ready information about the costings, about the quantitative details. It is a mandatory part of cost audit report. Tax audit report also, certain clauses, clause 18, 27A, 38, 40, TDS clauses, all these clauses which are directly related to GST. So all these clauses are important, and these documents are very important. Their review must be done, and their review will be done by department audit team also. So my understanding is that before you submit the data to department audit team for the purpose of audit, first review it yourself also, that everything is in place, everything is all right. Or even if you find that there is a qualification or anything, I'm sure we cannot change it, but yes, we can tell SSC beforehand also that this may happen in your case. Or RCM 9394, if you check before going to department, so before they find it out and we voluntarily submit, we will be saved by the penalty, saved from the penalty. So those things are there. So these documents, department is reviewing those documents in this way. If I think we review them beforehand submitting to a department, it will be a great help to the SSC. Similarly, if we talk about the service sector are certain extra things, which is the biggest thing is in case of audit report, annual report, director report, foreign exchange earned, because it happens in case of service sector that whatever foreign exchange is paid, forex they're paying. Earning, there is no problem. Earning, there was a problem with regard to intermediary service, which has been clarified few days back by department by way of circular. But there was a conflict between export of service and intermediary service. So foreign exchange, if there is any earning in foreign exchange, they need to check that particular transaction from that angle. If it is liable to tax as intermediary or it is export of service. Then paid transactions also plays an important role in case of service sector, because there are software subscriptions, there are multiple things which are paid directly to the credit card of any other person, director or partner, and they're recorded in the books of accounts. So they are effectively, and they are all covered under reverse charge also. I'm sure you must be knowing that these all foreign currency transactions, they have a bearing on the reverse charge mechanism notifications. So yes, the audit team, before you submit the data to audit team, please review your client that if there are any foreign exchange transactions, whether they have appropriately paid liabilities and reverse charge, or if it is not applicable, when you prepare it in mind beforehand that yes, this is the position and it will not be applicable or it may be applicable. Similarly, P&L account, if we talk about the service sector, there's a problem for reimbursements. So supposedly, if I talk about chartered accountant firm only, so they have we keep on claiming reimbursement from our client. So just verify before you give data that what the treatment has been done for those reimbursements. Are they treated as pure agent or in what fashion? And if they are treated as pure agent, then the conditions of that pure agent are fulfilled or not. Similarly, we keep on paying to our staff for out-of-pocket expenses verifications. So how we have treated it, any liability in the reverse charge. So these are just guidelines that how department has been guided, how they check the transactions. Similarly, if we talk about cost audit report in case of service sector, there the cost auditors are supposed to mention the figures of royalty and know-how charges. There was a dispute for royalty also. I'm sure you must be knowing that whether royalty is liable to GST or not in case of mining industry. Now, which has been again clarified by the not clarified exactly. The council meeting has again said that it will be liable to GST with effect from 1st of July 2017, last council meeting. So yeah, these readily figures are available to the department. So I mean to say that before you submit those records, and these records will be called for while when you will receive the ADT one. So check all these things in your record so that there's no mismatch and entire liabilities have been paid properly or not. And tedious records, I'm sure I have not mentioned anything about tedious records because we are aware that most of the notices under service tax were based on third-party data only. On that third-party data was nothing but income tax data or TDS data. So make sure that because the query is 100% supposed to come when your department records are audited, that this much is in your 26 years, this much is in your GST return, then what is the difference? So prepare reconciliation in advance only, because when they post the query, I'm sure you will get very less time. I've shown you the timelines. Duration is only 3 to 4 days for small SSC, and if you're not able to submit the data or if you're not able to prepare the reconciliations that particular time, you may end up finding a error in the internal audit report. So better is that we prepare, we see all those things in advance, and before we submit the data, not just merely submit the documents to the department team for their review, because they will review all these things. Better review at your end, buy time from department. Don't be in hurry. It is not supposed to be the case that we are always, notice comes and immediately we are supposed to reply. If we want time, we should buy time. We should go for extension. But whatever you are submitting, review these things. Again, there are certain important ratios also which department team is evaluating. I'm sure there must be notices for these specific ratios also in Mumbai. Also in Jaipur, we have received from multiple clients like cash paid through electronic cash ledger. Many of the assessees, they are paying 100% liability through electronic credit ledger. Nothing is paid through cash. So for that, I'm sure there's a rule inserted in GST law also nowadays, which talks about that you have to pay 1% of your liability in cash. So similarly, they are also evaluating that, looking to the type of industry. Is it correct that they're paying 100% liability in ITC through ITC? They're not paying anything through cash. Similarly, they evaluate the ratios like what is this inward supply cost, inward supply value, capital goods, what is the addition versus their input tax credit, what is the ratio of other income is to sales, what is the ratio of outward supply of scrap versus total supply made, exempt supply. Again, it is going to be a biggest thing because these ratios, how much is the exempt supply versus total outward supply. So now before they start, they don't have these ratios. They calculate these ratios based on your 9 or 9C you have submitted. But many times people treat many of the assessees have done a differential treatment while reporting the values of exempted supply in GST. Many have included that figure in exempted, and few have included that in non-GST. So ratios are calculated based on that data only. So as I mentioned, it's a self-assessment mechanism, self-assessment regime. Make sure that whatever compliance we are doing, it is up to the mark, because whatever data is submitted, on the basis of that data only, notice is supposed to come. Okay. So then again, zero-rated supply versus total supply, how much is the quantum? And they keep on evaluating these ratios on the basis of local parameters also. It's not just one thing. They evaluate them in light of economic parameters. They evaluate them in light of the type of industry in which the assessee is functioning. So then there's a holistic picture which is developed, and these ratios are evaluated and the paras are reported. Now, those are all financial data. So what are the records and registers which can be verified? So I have created a small list, like what can be the records and registers, because that was all about the financial data. Now I'm talking about those records, hard copy or soft copy, whatever records. So yes, if we talk about the outward supply related transactions, they will definitely ask for the purchase orders or service agreements, your price circulars. If your commodity is something linked, it is having price fluctuations, likewise in case of a metal industry or gem and jewelry industry, or if it is a commodity based industry. Similarly, your delivery challans in case of outward supply, what is the position? We may review those documents. Material transfer note, sales book, outward supply book. So the purpose of reviewing all these documents, there's a purpose, because there's the GST law prescribes the format of all these documents, not exactly the format, to prescribe the inclusions, that what should be the content of the valid tax invoice, what should be the content of a valid delivery challan. So supposedly if your assessee is not following those contents, he may end up finding a para that, yeah, this is not a valid invoice. And please don't think that the team is going to give you relaxation and all those things. I have seen cases here in GST audit, even if the assessee has forgot to mention delivery or it has taken the invoice for the purchase of goods, and the other party, the vendor, has mentioned the name of assessee, but it has forgot to mention the GSTIN or address or anything which is not as per rules of tax invoice. They are saying that this is an invalid invoice. They're asking us to reverse the ITC for that particular invoice, which is a very procedural part. So I also thought here that these kind of paras should not be taken up, because there is no loss to the revenue. But yes, while the audit team is doing the audit, they are not giving sufficient time. They will ask you for the documents. 3-4 days time is there. You will provide the documents. Before you provide, they're ready with their draft audit report. Then inclusion and non-inclusion, because if we read the law, we find that there is no such MCM concept under GST law entirely. There is no mention about this guidelines in GST law that yes, there will be MCM. If your para is approved in MCM, then it cannot be dropped. It will be issued for show cause, or it will be settled. But they have an internal guideline which is creating a problem. Recently, I had a meeting with Principal Commissioner of Jaipur for one of the audit report. I'm just sharing experience that there was the para was already approved in MCM, and somehow the assessee was in too little time it was given to the assessee for reply. Reply reached a day late, and MCM was already convened and para were approved. So we mentioned, sir, we don't find anything about anything about your guidelines in the GST law. If we take it from SSE's point of view, there is a cutoff date of show cause notice. Like whatever reply has been submitted before show cause notice, your team is bound to accept it. So he said, you submit us, no problem, but yeah, we will not be considering it because we have internal guideline that we are not supposed to consider the paras after MCM. We do consider after MCM, but yes, it's a big process, it's a long process. So you better reply in show cause notice. So I mean to say, these things are very important because, if you have received a notice, 15 days notice, we should keep all those things handy, all these documents, all these data which I mentioned you, not exactly, I would say you keep them handy, that officer will definitely ask, but you review at your end. You review the position of your client at your end, that what kind, and you update him that what kind of areas can be there where you can find little trouble. So in similar case, like stores department may, what can be the case, they will verify the GRNs, they may verify the material return notes, waste register is an important thing because, stocks, stores ka jo ledger hoga, that particular stock register, what we call, when it was excise regime, long back there were, they prescribed a format, but thereafter there was no format. And now GST regime, if we see the rules, they have not specified the format. They mentioned that this should be the part of the stock register. So if you have not incorporated anything like that, or if you have not incorporated that wastage or the columns which are supposed to be incorporated in this stock register, you may end up in problem. And many of the assessees in Jaipur, they were not in the habit of mentioning those waste in the stock register, or they were maintaining their stock registers in Tally or which was not providing appropriate, or they may not be able to use the features of the Tally or SAP versions in the initial days. But yeah, department is asking that you prepare it, everything right from the start. They are not assuming, they are not treating you bona fide. So all those things are actually happening with the VAT assessees or with the service tax assessees who are not very well versed with excise laws. So yes, if your auditee was actually a service tax assessee earlier, or it was a VAT assessee earlier, and now his notice has been received for the purpose of his audit in a GST law, please make sure that his stock records are properly maintained, because there's a requirement to mention all those things in the stock register, and they should be properly. Even there's a rule which says that it should not be edited or erased, or if there is any problem, it should be the audit trail or the amendment sort of trail. It should be readily available for the explanation to the officer. So the provisions are very tough; they're very tight, and compliance, till date, even after 4 years of GST, it is not very smooth. Similarly, your stock statements, they may verify whatever you're submitting to the banks. Job work register will play an important role, because there's a guideline that job work has to be returned within 1 year. So there was a return also for ITC 04, but yeah, it has already got waived multiple times, and now it has been the timelines have been revised. So yes, this register will play an important role to ensure that this transition is within that particular time frame. What is the exit date? What's the receiving date? So finance department related records, I'm sure we must be aware, we are all aware that ledgers, debit note, credit note, voucher, your internal audit report, and I would suggest rather, if your company has a internal audit process on its own or through a consultant, and if it is like, but before you submit, review it. But if it is like, if it is adding advantage to your company, we must tell the auditors that, yeah, we have a process, and this is the, this is accounting software, this is our internal audit system. Before you will start, sir, our team only keeps on reviewing multiple times what is the process. We have a regular internal audit process. So if you mention those things, they'll find that your internal control mechanisms are very strong, and you will be in a low risk category. The perception goes like this only. So income tax audit report, ITR, FAR, as per the company law, all those documents, because I've already mentioned that it is not just documents or records under GST law, it can be under any other law also. So there's a requirement under company law to maintain fixed assets register, which is not there in GST, or which may not be in income tax, but company law says so. But the audit team of GST can review that fixed assets register also. So if it is not available, definitely they will not raise the para for it that it is not available. But yes, they have information, and I'm sure you must be aware that these informations are shared across now. All the departments are aligned, they're all linked, and everything is shared to the department. So even there, they can evaluate your monthly stock statement, which have been submitted to the bank. So this is just an illustrative list. This is not comprehensive. You must see that whenever your assessee receives such notices, these records and registers are maintained properly. Now, few important judicial discussions were there, like audit under Section 65 and search under Section 61. So are these possible simultaneously? Because there are multiple cases now that DGGI team or SGST Joint Division team, they are taking care of search, and at the same time, auditor, the person has received the notice for audit under Section 65. So yes, Supreme Court has recently rejected the SLP in the case of Suresh Kumar, which was actually Kerala High Court case. So Supreme Court has also rejected the plea of the assessee that this is not the right case. Actually, audit under Section 65 and search under 67, they both are independent procedures, and they've clearly mentioned that audit is just a routine procedure. Audit, you cannot equate audit with the investigation. Or investigation is more, draconian. It is more onerous procedure, and for purpose of any search or investigation, there are multiple level of approvals required, joint commission officers required, and then there are certain reasons for which search is search is conducted. So you cannot equate audit with search. Even if your assessee is under audit under Section 65, when the search team comes, you cannot say that our books are already under audit, so we are not supposed to reply you, or even you cannot say that to the investigation team, vice versa. So yes, both are independent procedures, and this SLP has been rejected by the Supreme Court recently. and Kerala High Court case has been affirmed. Similarly, these days, what is happening that department is, while auditing your records for GST, financial year 17-18 onwards, July 17 onwards, they are issuing another notice without any mention, and they're asking you to provide service tax data documents also, and because your last audit of service tax was not done earlier or it was done long back. So they're asking that you provide the details of service tax period also, 15-16 or 16-17 financial year. We'll audit that period also. So whether that audit of service tax period by GST Audit Commissionerate, is it valid or not? Because service tax audit was undertaken under Rule 5A of service tax rules. So there's another, there's a case for this in OWS warehouse services. So it was held that it cannot be done, and because it mentioned categorically that while it is a Gujarat High Court case, so it categorically mentioned that when the GST law was enacted, there was no provision for saving Rule 5A. So Rule 5A is now no more, and now department audit cannot be done for that service tax period because Rule 5A is no more. You cannot invoke 5A, which is not in existence. So as there was no saving. So this is the reasoning given, and it was held that service tax period cannot be audited now by the CGST Audit Commissioner. But yes, practical reality is that they're doing it. And I would suggest that whenever you are replying to those notices for the service tax period, you mention these things in your reply so that the auditor also understands, or we are also at an equal footing. We can say that yes, we are out of the legal positions, and these particular positions is explained by this particular case law. Similarly, and this particular case law has been relied in case of TR Swane Motors also, which is a Delhi High Court case, and it is already in discussion, although, but yes, stay has been granted to the department proceedings. Coming to the conclusion point of my today's presentation, final part, like what are the tips to handle? So I'm not kind of giving a new kind of tips. So yeah, this is all regular things only, but just reiterating before you all. So whenever you're receiving an audit notice, what few certain points we should know that सबसे पहले we should see that audit ADT1 is issued by proper officer. So the reason why I explained to the management part of the department hierarchy, because you must know that it is received, that it is issued by a proper officer, and there's a DIN mentioned on it. I'm sure you must be aware that any document without DIN, it is invalid. So DIN number, and that DIN number can also be verified online on the department portal. So DIN is mentioned, ADT1 is proper, it is in correct format, it is issued by proper officer. Second, if you have any audit already in process, similar audit already in process, you can simply reply, or it is already conducted for same period, you can simply reply immediately that this is in process, and then we can stay away from the ADT1 proceedings, which has been initiated now. So check it that any parallel audit is in the process or not. But yeah, as I've already mentioned, it should be parallel audit. It cannot be parallel investigation, because Supreme Court has already mentioned that investigation and audit are different. Third thing which I would say, that you should cooperate with audit team. Don't make it a case that you do not reply to the notice. You should always cooperate with the audit team, provide the documents and information which have been asked, because the powers with department are extensive. And as I've already mentioned, it's not about GST compliance rating, it's about DGGI, which is very aggressive these days. And DGGI is intelligence department, and they're like immediately when the information is received, they are very proactive, and they are planning the searches, and they are conducting searches. I'm sure you must be knowing that all the big frauds, 7,000 crores here in Delhi and everywhere, all these are identified by DGGI team only. So the most active team when it comes to revenue intelligence is DGGI only, as of now, not even state. So make sure that you cooperate with the audit team and provide documents. You contact with the concerned superintendent who has been mentioned in the in the notice ADT1, and brief him up. Then information or documents, we should not take much time, because it gives the impression. First impression is the last impression. You all know. If suppose your documents are not ready, or you're buying unnecessary time, or you're providing a half information, then it will give a bad impression that the records are not there, or the internal control is not very good. So it will create an unnecessary perception in the mind of the OCC or of the auditor. And if that is the case, he may plan the audit in a different way. Fifth point, I've seen many times, whenever the notice is received, assessees are very fast to reply. They are like, no notice has been received, sir, please reply, aaj hi kar do, sir, today reply, sham ko hi kar dena, sir, isme 7 days likhe hue hain. Matlab, I keep on receiving such calls when I receive notice, but yeah, don't be under such situations, don't be under such pressures. We are all professionals. I'm sure we must be knowing that, we have a right to claim adjournment, you have a right to claim extension of time if the documents are not ready, if they're not, there's a reasonable ground. So you can mention they are the tax audit season is in process, or there's another compliance company laws in process. So whatever is the actual reason, you give it and seek extension. But yes, that extension should be sought before the expiry of the time. It should not be the case that you are already given 7 days time and then 15 days is over and 15 days are over and then you are asking for extension, because it again gives a bad impression. So and then whatever information you are providing about one category, supposedly if they're asked information about output tax, input tax, refunds and multiple things, make sure that information about one thing should be provided in one go only. Then before you submit any documents, please ensure vetting. Documents should be submitted under cover letter only. Please don't make any kind of telephonic or verbal communications with this particular GST team. Whatever you will discuss, they will not at all consider it. Whatever you have given in writing and you have an acknowledgement, they will consider it. And supposedly, if they do not consider that also, they are bound to consider it. So I'm sure you must be understanding the importance of a written letter and acknowledgement. So please make sure during this audit also, because timelines are very small. Many times it happens that person keeps ending up giving all the data on mobile and verbally, and then he says that, sir, you have not included my submissions. They're not bound to include it, and definitely they will not include it because they're all pro-revenue approach people. Then whatever figures or data you are presenting, please explain properly, because I have seen multiple replies by the SSC. They simply mention other income, 1 lakh rupees, sales, etc. So what is the other income? What is the actual nature? These things should be explained, because these are very basic questions, generic questions they will ask. It will unnecessarily kill your time. So better when SSC receives a notice, they should be in touch with the consultant, proper consultant, and then they should be able to properly explain the data figures and factual backing should be made. Whenever you're replying to the para, please make para-wise submissions. Don't make a common submission, because many times it happens that you don't make issue specific or para-wise submissions, and then everything is mixed in one letter, and they where to put in the audit report, they also don't understand. So better, whatever you're replying, please make your para-wise submissions, para-wise legal backing, para-wise case laws, and whatever are the admitted paras, deposit liabilities, but everything should be under writing. It should be under intimation to department. And please, I am sure we are all facing the problem that there is no option to pay GST under protest, which is the biggest problem. So yeah, already this discussion is under process at various judicial levels, judicial high courts, that why there is no option to pay GST under protest. So yes, as of now, there is no process, but yeah, whenever you are filing any DRC 03 for it, or whenever you are filing a challan for it, please record this fact clearly in the remarks or in the DRC 03 remarks that this is a payment under protest. Refer to the concerned DIN number or concerned notice number, ADT number, and then give intimation to the concerned GST audit commissioner. So that is crystal clear, because sooner or later this matter is going to settle. Then many times I have seen people receive the audit report, they are ready to settle the para, but they never check in which particular section the demand has been raised finally. Is it 73 or 74? Because I'm sure 73 is, it talks about the cases where it is other than suppression of facts, malified intentions, but 74 is, it's harsher than 73. Penalties are higher than 73 in case of 74. So please make sure that you check your paras. Don't just pay the amount, whatever they have mentioned. Many times they make error intentionally and unintentionally. If we check it properly, we will be in a better position to guide our client. Sometimes department also makes some procedural lapses. We should take advantage while filing the replies to the audit report, because maybe they consider not procedural errors at this point of time, but when the cases go for litigation at higher forums, they will they will be considered. So whatever is the procedural lapse at the end of department, you should mention. You should not hesitate in adding anything in your written letter. And most important, opportunity for us also. Plus nowadays, the mechanism of section 35 audit is gone. So whatever assessees we have, which you find that they can be covered into this particular category of GST audit, I've already mentioned the indicators, risk factors. So we can pitch in them to develop an internal audit mechanism, pre-audit mechanism, GST review mechanism. So right here in Jaipur, we are doing same thing, only that GST audit is not in existence now. So there's a professional approach towards the GST. There's a professional approach to pitch them for GST review mechanisms. So why there's a need of review, I'm sure you all must be knowing that the powers with department under section 65 are vast. They will be in a position to raise the matters under 73, 74, and then raising penalties. No, then in that case there will be no benefit of ITC even if you have paid something. So we should all try to suggest this to our client, that this internal audit or this pre-audit or this GST review mechanism is fruitful for them, and they will be in a position to be safeguarded against many liabilities. Although we cannot ensure anything from our audit, audit cannot ensure everything and anything done. But yes, if review find out 100 out of 100%, 70% of mistakes, it is helpful for them only. So with this, I would just end, because I just mentioned few common issues also, and I think because we are already running beyond time. So yeah, it's 106. So just few common issues which I could found, and out of my audit report, GST 2A 3B, it's a patent issue. They are 100% going to cover in all the audits for any period, 17, 18 also. Trans 1 audit, Trans 1 ITC. Similarly, like for exporters, Rule 9610 violation. Similarly, in case employees hain, to services to employees, notice pay recovery of GST. ITC in case reversal in case of exempt supplies. So many SSCs, as I mentioned, they interchange exempt with non-GST while filing 9 or 9C. But at this stage, they are asking for reversal of exempts, treating them as exempt supplies, even if you have treated them as non-GST supplies. Similarly, there was a big problem that in case of ITCs wrongly availed, they were asking for interest demands. But yes, now it is resolved to very good extent by the council meeting last, that it is applicable only in case of utilized ITCs. So even if you have paid in any case, treating department para, that this year it was supposed to be paid in case of wrongly availed also, you may claim for refund now. Now, similarly, in case of 17, 18, they're asking for 9.3, and many of the SSCs here, what they did, that they paid RCM even after 13th of 12th of October. So they paid RCM and they thought, okay, we paid, we'll take ITC. But now audit teams are saying that no, this cannot be a case. When the tax was itself not applicable, how can you claim it? It is a fake ITC. We do not treat it as ITC. Similarly, one bigger issue which is going on here is like personal guarantee by directors for corporate loans. So they're treating as a service by directors to the corporates, and they're asking the corporates to pay GST under reverse charge. And they're valuing also this value of this personal guarantee by equating it to the interbank guarantees given by bank to another bank for securing any particular loan. So most probably it is like 1% of the loan value, and then they're calculating 18% on that, and they're asking the corporates to pay GST and reverse charge. This is again a big issue, and it is going to go under litigation. So all those things are happening, and I'm sure while if you go for more and more, if your team will take more and more GST audits, because time is going to come for same, and already the teams have been floated, because every year by end of February or March, the audit team is given the list which for the clients which are supposed to be audited, and the GST audit commissionerate, they but the list is given by the DG audit to the GST audit commissionerate, and audit commissionerate finalizes this by end of March. So by the start of April, they have a plan that these many SSCs are supposed to be audited for this particular financial year. So yes, that area is going to increase. We will have 100%, I'm sure, more professional opportunities to deliver to our clients. And with this, I would just like to end my presentation. Thank you so much. And if you have any questions, we can now take them forward.
Thank you, Keshavji. It was a wonderful session. Now I would request Shailendra-ji to take up the Q&A session. Shailendra-ji, over to you. Shailendra-ji, can you unmute?
Yes. Okay. Now audible?
Yes.
Yes.
Yeah. Keshavji, there are a few questions from the members. Like one of the questions is Himanshu. Hard copy of notice received in form GST ADT 1 with DIN number, but no such notice with the DIN found in GST portal. Is such notice valid?
So, well, see, right now, the notices for GST audit are not received in portal right now. Till now, they have not started that portal for issuing of ADT 1. So most of the ADT 1, the most I would say, rather say 100% ADT 1 are received manually only. But yeah, if DIN is correct, it can be treated as valid notice. because there was recently a case before before High Court that WhatsApp के through होगा या in case कोई mail पे भेज दिया होगा, is it valid now? But yeah, manual submission, manual service of the notice is also as good as this portal submission.
Next question. In GST audit, if an officer is satisfied that in GST 9 and 9C, GST is paid more than annual liability, can he pass the order with refund due to SSC?
No. Audit Commissionerate is not supposed to pass any such orders. Audit Commissionerate is simply supposed to do the audit. They will mention in the audit that this was the amount was paid to the say this was access paid. They will not pass the refund order. Now, assessee need to take the base of that particular audit report and file the refund application on GST portal. Then, the concerned jurisdictional officer will pass the order for refund. Refund sanctioning powers or refund disbursement powers are not at all with GST Audit Commissionerate.
Next question. If private limited company has multi-state presence and have one combined audit financial statement, can officer insist sign audit profit loss of that particular state?
1 minute, just. If this one, Himanshu, I think you're reading this one. If private limited company has multi-state presence and have one combined audited financial statements, an officer insists signed audit.
Signed article for that particular state, he can ask for separate profit and loss account statement?
No, they are not supposed to force you for getting audited state-wise financials. At maximum, they can ask that it has to be certified by management with the confirmation of auditor that we have been incorporated in the final audited financials. So it cannot be the case that they will say ki you submit the signed financials is alag se for the particular state. It cannot be the case, because here also it happened, and we have a client which have multi-state presence. So he asked us ki you provide me the state-wise financial of your particular state. So I said, sir, those will definitely not be audited. So do you have any problem? So he said, no problem. You give me that particular state trial balance approved by management, and auditor will give a additional declaration that these have been incorporated in the main balance sheet of the company, which has been based on PAN number.
Next question. Who has to file up GSTM Annexure 6, auditor or auditee?
GSTM Annexure 6 is about auditor, not auditee. Auditor.
Whether time limit gets automatically extended when auditee requests for more time to submit data?
Yes. See, that's what I told. If you submit that particular request within time, there is no problem. And as the time is short, better keep in touch with the officer also, and whatever you are discussing with him, make sure that you put it in writing by way of letter. It can be beforehand also, or if you have discussed already, then better put a letter next day that this has been discussed with you, and as you have discussed, you have extended the time for providing the data. So but they have a maximum time that time commences when you give the data. Time commences for 3 months time जो है वो start ही जब होता है जब data आप दे देते हो. So data देने का problem नहीं है. But yes, you have to intimate them that this is requested, and if they have given the extension, make sure that you draw down it in writing.
We have taken all the questions in the chat box. I request member, if there are any other questions from them, can raise a question through chat box or raise a hand so that we can.
Salangarji, I have one further question on this GSTM Annexure 6. Actually, see, these GST auditors, they are asking us to fill up that form. And that's a long one, actually, almost 17 pages.
That which covers everything, जो पूरा उसमें
what they are supposed to do.
और the table है पूरा एक बहुत बड़ा.
And what they are supposed to do really.
Yeah. So this is happening actually. क्या हो रहा है सर, जो ADT बना रहा है उसके साथ ऐसा annexure आ रहा है वो. ADT एक सिंगल पेज का है, उसके साथ में एक annexure आ रहा है जिसमें सारी quantitative information ये वो सब कुछ वहाँ कर रहा है, मतलब बहुत सारा detail extensive document है वो. So in here what we are doing, because वो सारा जो data है that is readily available with them, which I mentioned that they are supposed to do desk review also before they send you the notice. उनके पास जो data है उसका उनको desk review करना है. So that data is available with them in already, but still they are asking the assessee to submit that data, and it is a very time consuming data, super bulky data. And वो 100% 15 days नहीं, I'm sure 20-30 days में भी कोई नहीं दे सकता उसको. So there you can mention that this, you should not mention this way that we will not provide you this data because you already have this data. उसमें कोई ऐसा foundation नहीं है. But yes, if you see the GST audit manual which has been given to them by the board, it mentions that this is supposed to be done by auditor, not the auditor. But what they are doing here, they are simply attaching that annexure and they are sending it to auditor that you fill it.
Right.
Yes. So this is happening. So you can, if the case goes, if the things are normal, first I would suggest you request them that this is not possible and these are documents we've already given. You start the audit. Okay. Agar things are not happening that way, then you can quote the GST audit manual.
Got it.
In service industry, ITC on rent paid on property can claim. ITC even in case of rent on such property not earned in case of hotel industry due to pandemic. I think the question is that there is no outward supply and ITC on rent paid on property can be claimed. So your property is on rent, I'm assuming that your property is on rent. So you've taken a hotel on rent, you're paying rent for it, but there is no outward supply. There is no outward supply. So you are asking that whether you can take the ITC of that. So yeah, so as of now, there is no problem in ITC because ITC is barred only in case where there is an exempt supply or there is a non-GST supply. Otherwise, ITC is not barred. So here the case is that during the year you have no, I am assuming that you have zero supplies. There is no outward supply during the entire year. But if hotel is operational, the situation can be if hotel is not at all operational, hotel bandi pada tha, rent hi dene par se, then I think ITC cannot be taken because there was no business use, there was no business purpose. But if hotel was actually operational and due to business circumstances, due to this pandemic circumstances, there were no receipts at all, hotel operational tha. So in that case, ITC can be taken because it is not at all barred under any of the provisions of GST law, which says ki exempt hona chahiye ya non-GST hona chahiye. Neither your hotel service is exempt nor it is non-GST. Thank you.
Any other questions from the member?
Lenika ji has raised her hand. Yeah, Lenika ji.
So it was a very nice, very informative session. I just wanted to ask one thing that you had asked about. You had said initially about the place of business. You said that they can even consider any place which the SSC has not declared as a space of business. So who is allowed to actually decide whether it is the place of business? Is it? I mean, is it the assumption of the AO? He can assume any place. I mean, how can, and then if he assumes something that is not acceptable to the SSC, how can he revert?
Okay, so I discussed the case ki supposedly I have a factory in Jaipur, industrial area Jaipur, but I forgot to add it into my registration certificate. Okay, so now the case is ki wo mera place of business hai nahi, but yeah, that is my place of business, but it is not mentioned in my certificate. So here I was mentioning that the definition says that the place from where business is ordinarily carried on. So nobody is going to decide. Obviously, assessing department will say that this is your place of business. If you can justify them that we are not at all carrying on any business from that particular place, there is no problem. It cannot be treated as your place of business. But the definition starts with the thing that a place from where business is ordinarily carried on. So if you're carrying on a business, but still if you added it in your RC or not, it doesn't matter. So this way it has to be decided. Definitely department will say that this is your place of business, but yes, we have our own submissions for that, that we have a reason for that, that this is not at all rented, we are not even owing it, we are not doing any kind of business activity, or even they can go for a physical verification. There is no problem.
Okay, thank you, sir.
Thank you, sir. Shailen, shall we wind up the Q&A session?
Yeah.
Okay, thank you. So thank you, Keshavji, for your wonderful session. Now we'll have a formal vote of thanks. I will request Shailendra Dadiji, Deputy Convener for BKES Study Circle, to give a formal vote of thanks to Keshav Gupta ji. Over to you, Shailendra.
Thank you, Aditya ji. I, on behalf of Borivali Kandivali East Study Circle, I hereby present my hearty vote of thanks. Thank you, Keshav ji, for taking out your precious time for this session. It was very informative and knowledgeable sessions, and Thank you for enlightening us the scope of for the professionals after abolishment of the voluntary audit. I once again thank you. Definitely this session will help the members for handling the departmental audit. Thank you, Keshav.
Thank you. Thank you, Shailendra.
Thank you, sir. Thank you.
Thank you, Aditya.
So now we shall close the meeting.
Yeah. Natanani ji has joined. I think
Natanani
he
ji
want to say something.
Yes, Natani ji. Just hold. Let me give you the hosting rights. Just hold. Natani ji, I have made you a co-host. Now you can speak. Yeah.
Thank you, Shailendra. Good afternoon, friends. I think you enjoyed the GST session. Keshav ji has taken a very good session and he give the lot of insight of the GST audit. Keshav sir, I couldn't join full session, but I attended almost 1 hour for you in your session. Really, it's a very informative things and a very insight you have given to the members for the GST. Thank you very much. And the whole BKES team is really doing a wonderful job arranging the seminars and that things. So thank you very much, everybody. Thank you.
Thank you, sir.
Thank you. Thank you, sir.
Thank you, sir. So, shall we wind up the session or anything?
Yeah.
Anything else?
I think we already covered.
Okay. Fine. Thank you very much. So I will officially end the meeting. Thank you.
Thank you, Keshav.
Thank you. Thank you,
Thank you.
Shailendra.